across now to Rajeev Mehrotra, CMD at Rites. He's joining us. Sir, can you just talk about Q1, what has happened, what's the order book? Can you also just tell us that how things are moving in after things are opening up?
Well, this was a very difficult quarter in general for everybody. But at Rites, we are satisfied with the performance we have delivered. Against last year's turnover of 573 crores consolidated, we delivered 379 crores of turnover, almost 33% down. But if you see the composition, only because of exports, about 22% reduction is there. Because this year, the exports are not in Q1, but these are lined up in Q3 and Q4 mostly. So once we see the overall yearly performance in 21, we will see this making up. So there's nothing to worry about it. Whatever has been delivered, we have rather improved margins in Q1 also. There is a strong order book and company is financially strong. There are no further debts incurred. We put in place cost management in time. As a result, we could see that we could do a reasonable turnover with margins intact or rather improved in Q1.
Things opening up and that continuing to impact the operations, things on a quarter-on-quarter basis should start to look positive for the next 3 quarters?
Well, I think the Q2 is still, the general environment of difficulties in travel, meetings, all that. Q2 is also going to be a little difficult, but once the recovery is, possible in Q3 and Q4 in general, the general working environment, company is comfortable with a lot of orders in hand. We'll just start as soon as we get the chance to get full normal activity. But yes, definitely Q3 and Q4 look much better than H1.
Okay. Mr. Mehrotra, I just want to understand the consultancy segment. This is one of your largest verticals, and I think there was disruption caused in March. Foreign projects as well have been affected. You spoke about that briefly in your first answer. I just want to know how the pipeline of projects have sort of picked up. Where have you seen, or which segments really are seeing, maximum orders coming in from?
Order book now compared to June of FY20, we are marginally up in terms of order book. We accumulated about 250 crores net order inflow. But there is a shift in this order book. We have added the order book of consultancy. We have increased significantly the order book of exports. And these are all good margin businesses as compared to turnkey. And the delivery would be scaled up in from now onwards. We will see focus on this. And a significant focus would be on the exports, which are lined up for Q3 to Q4. And this can give an overall moderate, I will say, growth this year. So order inflows are actually coming from consulting as well as from exports, and expecting a major, decision from the railways once they decide about the turnkey contracts, which they are in the process. We are going to submit price bids on 17th of August. So I think some more orders will come, hopefully in September, for turnkey projects as well.
Right. And how is exports? Because, in FY20, that was a major driver. So yes, in India, like you mentioned, metro, railways, these are some of the thriving segments from which you're expecting a lot of orders. But how has exports been, which has, again, been a major revenue contributor for you in the year gone by in FY20?
Well, I think this year also the exports hold a lot of hope for us. We already have orders of about 1,400 crores, 29 crores, which are in the pipeline for execution, and shipments may start by end of Q3 and mainly in Q4. So this year we should see a higher export growth over previous year. And my attempt is to push it to around 600 or maybe 650 crores if possible. If the production lines are in place, there are a lot of assemblies, sub-assemblies, which go to the production units in India. So if everybody is in a position to maintain the supply line, we should see a much better export performance this year than over last year. Then, of course, other businesses, consulting and leasing are also intact.